So we're back. We're having to go to the conversation part of economy and markets this morning. So basically, we are navigating a unique period in Nigeria's banking landscape. This is one of a kind of time. So after a year of record-breaking earnings, or 2 consecutive years of record-breaking earnings, the CBN decided to do something. They pulled the plug on regulatory forbearance. They told the banks, now you have to now pivot towards balance sheet strength. You have to have stronger books. You have to reclassify some of those non-performing loans. What's changing? Banks will now have to provision more. They will have to keep a lot more of their earnings as impairment charges. There will be a likely uptick in loan write-offs, and we'll have elevated non-performing loan ratios. Augusto and Co., the credit rating agency, already projects that the banking sector's NPL ratio could hit 6.9% by the end of 2025. At the end of 2024, it was 5.2%. But that's not where the story ends. There's also the part of the recapitalization that is also in full swing. At the end of that was last year, Q1 2024. At the end of Q1 2024, the CBN governor came up with a bombshell announcement asking that banks would have to recapitalize for those. And against the backdrop of that recapitalization, the industry has already raised over 2.5 trillion naira between April 2024 and July 2025, just in about 15 months. This is a 15-month period that amount of money has been raised. Yet the race is not over. There's still anticipation that that industry would raise around 900 billion before the end of this year, bringing the total figure raised to just around 3.4 trillion naira. In capital injections, this is what is being projected. Banks are scrambling to meet that deadline. And one standout moment that I must mention is the fact that just 2 days ago, Premium Trust announced that it had hit its 200 billion minimum capital requirement, putting it ahead of expected timelines and a very small group of early achievers. And on the show this morning, we have Dr. Kingsley Ayoze, who is a public affairs analyst and a chartered accountant. Good morning, Dr. Kingsley.
Yeah, good morning, David. Thank you so much for having me.
So we'll have Dr. Kingsley answer some of our questions, and we'll start now. So, sir, as the CBN's recapitalization deadline draws close, how do you assess the progress of Nigerian banks in meeting the new capital requirements?
Thank you so much for that question. If you recall, I think a couple of months back, last month to be precise, there was a publication with the striking headlines: Zenith, Wema, and the 6 others scaled through the hurdle of the CBN capitalization. So which means so far, 8 of our deposit money banks have been able to meet that desired requirement put in place by CBN. This exercise is meant to last for a period of 2 years. If you recall, they were given a 2-year period, more or less a grace period, to recapitalize their capital base depending on their nature of business. So we have up till March 31st, 2026 to say, okay, these are the banks that have been able to meet the deadline, and these are the banks that have not been able to meet the deadline. But from my own assessment, I would say so far so good, because 8 have convincingly met that requirement. So that's the way I want to put it at this moment, David.
So basically, but when if you even add if you add Premium Trust to the number, I think we'll make it 9, because Premium Trust does
9, yes, 9, yes. 9.
So, but let's look at this. We have 26 banks.
All right.
We have 26 banks, at least on the CBN's website. When we say commercial banks in Nigeria, we have 26 banks. I can say for Nova Bank, which was the merchant bank, they announced that they were going to go with a regional license. They were not going to go full national because they just recently moved into that. They just entered into the fray of commercial banking. Based on all of this assessment, do you think that we will have? Do you project that we are going to have anything like, say, we're going to have a consolidation, mergers and acquisition? Is that something that you are looking forward to? We've not had any, except the only announcement we've had is probably the announcement of Unity Bank and Providus, but we've not seen any significant action for over a year on that particular deal. Are you projecting that we will still see more mergers and acquisitions as we head towards March 2026?
Thank you again for that question. Let's even find the percentage ratio of the number that have so far crossed the hurdle. If you want to go by the total number of 26 banks, so to say, from the CBN website, against 9 that have been able to meet that requirement. So 9 over 26, give and take, is hovering around 33.3%. That is 1/3. And so far, we have barely 6-7 months away from now. So to me, I see a situation where toward the tail end of the year, those banks that may not be able to meet up this great hurdle will look for other form of business combination, such as acquisition. So if they cannot be able to raise the capital inwardly, they may be swallowed up by other bigger banks. For those ones who may be able to come up but may not be able to reach that hurdle, may finally go into merger, or what you call amalgamation. So to answer your question straight, I foresee a situation where so many banks, the weak ones, will certainly be acquired by the strong banks, whereas the relatively stable banks may likely merge with other comparative banks. So we will certainly see a lot of mergers and acquisition toward the tail end of the year. As the year is drawing nearer, that is what we are likely to see.
Okay. Now we are moving on from, let's move on from recapitalization. Let's move on to this issue of regulatory forbearance. Fitch Ratings in his report noted that he's expecting that most Nigerian banks will exit forbearance by the end of 2025. However, to exit forbearance, what that would essentially mean for a number of them, is that they will have to reclassify a large percentage of their stage 2 loans to stage 3. How significant a challenge will this be for the sector, considering the fact that stage 2 loans in some of these banks, in fact, they are more than the stage 3 loans?
Well, to address this particular question you just raised, certainly it would not augur well for the banking environment, a station where you're likely to reclassify from stage 3 to stage 2. The significant implication is that it may begin to, affect the banking environment. Investors' confidence level may begin to dwindle, and as such, you may discover that funds may begin to be put out from the banking environment. So to me, it will not really speak well. Rather, I see it as something that may spell doom if not urgently rescued. Thank you.
I have a question around now. One of my own personal assessments is the fact that one of the challenges that this will spell for the sector is the fact that a number of banks will be affected in their credit rating. Their credit rating will probably be affected in a way where they will not be able to raise funds at the same rate that they raise it right now. How will on the overall macroeconomic environment, if that happens, let us assume that happens, how will it affect the macroeconomy? How will it affect the man on the street? How will it affect people's savings in the bank? How will it affect the bank's ability to lend to people?
Well, looking at it from that perspective, the implication it will have, especially on the man on the street, will certainly not be a positive one, in the sense that you may likely go into the bank to make some withdrawal, hoping to get what you have planned to get. And at the end of it, you may likely get something below. And if that continues, you may be surprised that some of the branches of the bank may likely close up. Or those ones that may not close up may begin to work for a minimum number of hours. And that will also lead to a kind of panic within the system. Imagine when you have come to the bank in anticipation to draw up to 50,000 and you are being told that, oh, sorry, we can only pay you 20,000. You can come back next time or go to the next branch. So that will begin to create some kind of panic within the banking environment. On a larger scale too, for those banks that may not have adequate funds to disburse to customers when they come, may lead to closure of branches. And the implication of this closure of branches may likely result to job losses. And when there are job losses, you will bear me witness that over time, those job losses will give rise to unemployment. Currently, Nigeria is trying to reduce the unemployment rate. So anything that will increase the unemployment rate will not really speak good of us. And once the unemployment rate goes up, then we begin to battle with social vices. Currently, you have issue of youth restiveness, you have issue of banditry, kidnapping, and all of those things. So at the long run, this is where we may likely find ourselves. And that will smell doom for the man on the street. Even for you and I, we may not be able to work freely, because for those who have been working over the ages, over the years, and suddenly do not have work, they will have to look for a way to make ends meet. And that way could be disastrous, and it will not really augur well for you and I and the general masses at large.
Okay, so the question I want to ask now is still on this issue of regulatory forbearance. We have a current economic state. A number of businesses are still trying to level up. Everybody's felt a lot of bites from the last 2 years. For some businesses, the ability to record positive cash flow is still hampered. Even when you look through the books of some of our listed companies, discover that there's a lot of credit sales. A lot of companies have relied on credit sales. And we're in a position where banks will now are under pressure by the central bank to begin to recover their loans. Given the current economic state, given some of the pressures that we'll see on the ability of borrowers to repay, what's the outlook for banks' abilities to recover loans? Are they in a good position are they in a prime position to recover their loans, or do you think that we may see it may be difficult? Do you think banks are in a prime position to recover their loans at this point? For some of them who are very exposed to have very high regulatory forbearance, or have very high forbearance exposures rather?
From my own assessment, I see a situation where most of the banks may not be able to recover their loans. That is the truth of the matter, because you will recall that the time value of money is very critical and germane under this scenario. How much was actually given to them as credit, and what is the value of that money that was given to them in time past? So we're going to face serious challenge, or if not challenges, in recovering this money from the populace. Again, I want to say vividly that for the ones that can be able to recover, maybe those ones that were properly secured, that had the adequate security. For any loan that was given without adequate security, recovery, especially at this time when the socio-economic landscape of the country is facing great reforms, and these reforms currently may pretend to be a little bit harsh, though in the long run, we are likely to begin to reap the dividend. So from my own assessment, on the part of the banks, it may be a little bit difficult indeed to recover going by this regulatory forbearance. So it's not going to be an easy task. A lot need to be done. They need to gear up. They need to use other measures, because if not, I don't see them making any positive headway as far as recovery of these credit facilities and loans are concerned. That's my own view on that.
Okay, now a question I want to ask about overexposure to oil sector. Now we know that overall Nigerian banking scene is overexposed. I think more than 50% of all loans in the entire Nigerian banking scene is to the oil and gas sector. Oil prices are currently at a level that is lower than what it was last year, and these oil prices are expected to remain at this level for most of this year, at least till the end of this year. How does the concentration risk affect the bank's ability to maintain their asset quality? Did you get that question,
Well,
sir?
looking at it from this angle of over concentration on the oil sector and given the fluctuating rate in oil prices over the period, no doubt, the banks will begin to feel some kind of economic shock, especially going by the relatively unstable FS rate. Though of late we can say it has been stable, but if you recall from the assumption of office of this administration, the rate have actually sold well above 1,007, 1,006 per dollar. But of recent, we can say, okay, we are really hovering around 1,516. The implication is that it will impact negatively on the bank's liquidity and capital adequacy, because these oil prices, once it drops, certainly will affect the amount that was actually given. So it's not going to be a good one. It's not going to be a good ride for the banks. Bearing in mind this fluctuation, and this fluctuation is also being hampered by the high rate of inflation. The inflation rate is also not good enough for the economy. The interest rate from the banks is also not smiling, then coupled with the economic shock. So it's not going to be an easy ride for the banks. Looking at all of these indices, all these macroeconomic indices, the interest rate.
Doctor, can you hear me?
Yeah, David, are you still there?
Yes, I'm still here. We lost you for a moment.
All right.
So let me round up with this question, because the question I want to ask is around on the lighter notes. What is going on in Access Holdings? I'm sure you are abreast with what has happened in the Access Holdings. That's the holdings group of Access Bank.
Yes.
So we saw the CEO of Access Bank step down from the board. Then we saw the group itself change its head. Now we have Mr. Innocent Ike. It's some form of shake-up in the board. Were there any signs leading up to it?
Pardon? Can I get your question again?
No, I said I'm asking a question regarding Access Holdings board shake-up that we saw in the last 2 days.
All right.
So we saw Mr. Roosevelt Ogbonna. He stepped down from the board of Access Holdings. Then we saw the group CEO, that's Bolaji Agbede. She too had to resign. She had to leave the board just after 18 months of being in charge. We saw Mr. Innocent Ike, who was the former Polaris CEO, step in to become the group CEO of Access Holdings. It's been quite a shake-up, at least for that bank or that particular group this week. Did you observe any signs leading up to it?
Okay. The issue around the board shake-up with Asset Holding revolved around this emerging topic or issue known as corporate governance. What is corporate governance? Corporate governance simply has to do with the way and manner corporate entities are being controlled and directed by those charged with governance. Okay. Then back to the issue with Asset Holding. Within the ambit of the law, that is the CBN Prudential Guideline, which more or less serve as a corporate governance code for banking businesses. I'm aware, and you're also aware, that the number of directors for any finance holding things of that nature should actually be 9. So in the case of Roosevelt Ogbonna, you will recall that the number have actually exceeded that 9. So in order to comply with that regulatory requirement of a maximum number of 9 directorship, as a matter of fact, he happened to be a non-executive director in Asset Holding. So he needed to resign, step aside, while still retaining his seat with the asset bank.
Yes.
So it is purely compliance and adherence to strict corporate governance code with emphasis on the number of directors expected to sit on a finance institution. So it didn't come to me by surprise as somebody who believes so much in the ideals, the principles and tenets of corporate governance, more especially for that of bank. It is a very, very volatile environment where issue that borders around compliance to corporate governance must not be toyed with.
That's all we can take for this morning on economy and market. Thank you for having and staying with us, sticking with us on the program this morning. Have a very lovely morning and enjoy the rest of your day. I'm David Olujinmi.